It's a range-bound market, so typically I think you would want to sell near the upper end of the range, which in my belief is close to about 11,150, 11,200 on the Nifty and about 28,400, 28,500 on the Bank Nifty. I think as few days have gone by with consolidation, I think there's a chance of breakdown happening. Now we are at the lower end of the range and we are still not seeing any reversal. Particularly the Bank Nifty, if it breaks 27,850, 800 zones, then I think we could see another 400, 500 points kind of cut or decline happening immediately. So I would be keeping a close watch on the Bank Nifty and see if it breaks 27,800, then I think we'll take a negative trade. Or during the day, if we get a reversal signal, then maybe we might again try and go towards the upper end of the range. So I have a mix of buy and sell calls. A sell on Century, I think the intraday charts are quite negative with a stop at 877. This one can be sold for targets of 840. I also have a sell on Eicher Motors, which has had some kind of negative candlestick pattern. That's a sell with a stop at 16,260 for targets of 15,300. And two buy calls, HCL Tech, that's a buy with a stop at 1,069 for targets of 1115. And Max Financial, good price and volume breakout there, buy with a stop at 433, look for a first target of 455.
Well, when I look at the chart, indicator wise tells me that I am in buy mode. But the market is trapped between 10,901 and 11,181 for last 6 trading sessions. That's too much to ask for. The more time it spends here, the more weaker it becomes. So I would say that I think a next down move is perhaps around the corner. We are range bound, upper end of the range we should sell at, lower end of the range perhaps I might consider covering shots, but I don't know whether I'll buy or not. But so far to me the structure looks weak, though indicator tells me I'm buy, so I'm more biased down. I have two stocks, two longs and two shorts. Maruti looks like a buy here. Possibly we'll see an up move to around 6,450. Stop below 6,030 should be okay. And I also happen to like TCS. Now TCS has given some kind of an indication that it's going up. Possibly we'll see a move to around 2,240. Stop below 2,170. Two stocks weak. Cement was weak yesterday, so I've selected Ambuja Cement. Possibly we'll see a slide to around 200 zone, that's a psychological support. Stop about 210 should be okay. And L&T Finance actually is broke down yesterday. I like the way it's broken down, so possibly we'll see levels closer to around 90 and stop about 102.
Actually don't look at the 200-day moving average in this because I don't think it has any say forecasting value. But 11,190 is so far away from current levels. Let it be a hurdle, at least let us reach there. That itself seems to be very difficult now. The Nifty is locked in a trading range between 10,900 and 11,100. For the last 4 days, it has been moving inside that price boundary. Now, once it does that, and that creates choppiness, which we are seeing intraday choppiness, overnight choppiness, the markets are almost unpredictable inside this range, and that happens 3-4 times a year. Do nothing. I am buying on dips every time it comes towards yesterday it was towards 11,000. Today, if it comes towards 10,950, I'll take an intraday trade on the long side and exit wherever I can. The big trade will come above 11,100 or below 10,900, and that may take time. Well, one of them matches with Prakash ji. Prakash said Maruti, and I think we are looking at the same charts, and we should be. Maruti is an excellent bullish pattern, bullish head and shoulder, which is on the verge of breaking out, and it's a textbook pattern. So you must buy Maruti. Now, Sonia, you have to tell me, why is Maruti planning to go up? I have no idea. I've heard so much about autos and that they are falling like 9 pins, but Maruti has an excellent chart. That's a buy. Indigo is a buying opportunity. The stock is already in an uptrend. A small pause in the charts in the trading suggests that it's just a consolidation before a new up move. Finally, Tech Mahindra is a buy. That's a buy after a mini bear market has already been through. The stock has already been through that. Tech Mahindra is now bottoming out. This is more a buy for position traders because intraday sometimes strange things happen. But if you're looking at a good idea, Tech Mahindra fits that bill for buying. And Yes Bank is a short sell. Short sell should be intraday. I've never been upbeat on Yes Bank. Whatever you can get out of it.